back in the 80s, and a good example of this is the 87 crash, the markets were not all connected, okay? Today, they are all connected, okay? What the Fed does, what hedge funds do, what the big investment houses do,
what the
they're all the
ECB
same
does.
people, the same club, the government, the U.S. Treasury. It's all the same, and it never was before. I mean, there were no hedge funds back in 1987. It was the individual, well, there were, but they were not a factor. The individual investor was still the primary investor in the stock market, and it was in the 87 crash. It was individual investors getting spooked and selling out just because everybody else was selling out. And most of the people who sold out, if they had good stocks in the first place, were able to buy them back at a lower price.
Here's a prediction for you, Tim, and for everybody else watching. I think by the end of this year, they will be faced with a massive recessionary pressure to reverse course, to go back to quantitative easing unlike we've ever seen before, go back to dropping interest rates.
I don't think they ever left quantitative easing.